In May 2026, the United States government did something it has almost never done in modern peacetime history. It didn't write a check. It didn't hand out a grant and walk away. It bought a piece of the company instead. 9 times over across an entire industry, in one of the strangest, quietest moves in the history of American economic policy. And almost as soon as the ink was dry, Wall Street started rearranging itself around it. Here's the sentence that should genuinely surprise you. For most of American economic history, the federal government has been a customer of innovation, not an owner of it. The Pentagon writes checks for fighter jets, but it doesn't own a piece of Lockheed Martin. NASA pays contractors to build rockets, but it doesn't hold equity in SpaceX. That's simply not how the American government has traditionally operated, at least not outside of genuine national emergencies, like the 2008 financial crisis, when Washington briefly took stakes in banks and automakers before quietly unwinding almost all of them within a few years. Quantum computing just broke that pattern completely, and it did so quietly enough that most people outside financial and tech circles barely noticed it happened. In May 2026, the Department of Commerce announced letters of intent to invest roughly $2 billion in grant funding across 9 quantum computing companies, funded through the CHIPS and Science Act, originally signed back in 2022. But here's the part that made this fundamentally different from every previous government tech grant in memory. In exchange for that money, the United States government is taking minority equity stakes directly in each of these 9 companies, not just funding their research, owning a piece of their future. Let's sit with that distinction for a second, because it's genuinely unusual. A grant is money given, with strings attached, research requirements, reporting obligations, milestones to hit. An equity stake is something else entirely. It means the government now has direct financial upside if these companies succeed, and direct financial exposure if they fail. Washington isn't just funding quantum computing anymore. Washington is now, quite literally, invested in whether quantum computing actually works. Think about how strange that sentence would have sounded even 5 years ago. Government officials aren't typically in the business of betting taxpayer money on whether a specific emerging technology pans out, the same way a venture capital firm might. Venture investing is built around accepting that most bets fail and structuring a portfolio so the rare, enormous success covers for all the failures along the way. Governments have never really operated on that model because taxpayer money doesn't, private venture capital does. Watching Washington adopt a strategy that looks, on paper, remarkably similar to how a Silicon Valley venture fund spreads its bets is exactly the kind of shift that should make anyone paying attention sit up and take notice. The list of companies receiving this money reads like a cross-section of the entire quantum computing industry, deliberately spread across competing technological approaches, rather than betting everything on one horse. IBM received the largest single grant, roughly $1 billion, which the company is combining with an equal amount of its own funding to build what it's calling America's first purpose-built quantum chip foundry, a dedicated facility for manufacturing the highly specialized semiconductors quantum computers actually need to function. Global Foundries, a major chip maker, is receiving around $375 million to scale up its own quantum hardware manufacturing capacity. Then come the smaller, but still significant stakes, roughly $100 million each, going to D-Wave, Quantum, Rigetti Computing, and Inflection. 3 companies pursuing meaningfully different technical approaches to building a working quantum computer. Rounding out the list are Atom Computing, PsiQuantum, and Quantinuum, alongside a smaller $38 million allocation to an Australian-founded startup called Dirac. Altogether, 9 companies, 9 different bets, spanning nearly every major competing technology in quantum computing. Today, from superconducting circuits, to trapped ions, to photonic systems, to neutral atoms, to silicon spin qubits, that level of technical diversity is worth pausing on because it tells you something important about how deliberately this portfolio was constructed. D-Wave built its business around quantum annealers, machines specifically tuned for optimization problems rather than general purpose. Computing, an approach that's made it the most commercially deployed quantum company in the world today, even as some critics continue to debate whether annealing fully counts as quantum computing in the strictest technical sense. Rigetti and IBM, by contrast, are building superconducting gate-based systems, the more conventional approach most people picture when they imagine a quantum computer. PsiQuantum is betting on photonics, using particles of light, instead of electrical circuits. Inflection and atom computing are exploring neutral atom architectures that can, in some cases, operate without the extreme cryogenic cooling most other approaches require. Nobody inside the US government appears to be confident enough in any single one of these approaches to bet everything on it alone, which is exactly why the money got spread this widely in the first place. A senior Commerce Department official, speaking to the Wall Street Journal about the strategy behind these deals, offered a surprisingly candid explanation for why the government spread its money across so many fundamentally different technical approaches at once. The government did so many different deals, specifically to spread out its bets, acknowledging openly that it could take years before any of them actually pay off. That's an unusually honest admission for a government announcement, essentially conceding up front that nobody, not even the officials writing the checks, knows for certain which of these 9 approaches will actually win. And here's where the story stops being just a quiet piece of industrial policy and starts becoming something Wall Street immediately couldn't ignore. The moment this announcement broke, quantum computing stocks didn't just react, they exploded. Shares of IBM jumped roughly 12% on the news. A smaller, less well-known quantum company called Arkit, which wasn't even part of the direct funding announcement, still surged by roughly 25% purely on the perception that quantum computing as a whole had just received a massive vote of confidence from the US government. IonQ, despite conspicuously not being included in this particular round of funding, still popped. More than 12%, and a smaller quantum firm called Quantum Computing Inc. jumped around 19%. Think about what that reaction actually tells you. Companies that received $0 from this announcement still saw their stock prices surge, sometimes by double digits, purely because investors concluded that if the US government was willing to put real money and real ownership stakes behind this entire sector, quantum computing as a category had just been fundamentally revalidated in the eyes of the market. That's not how a normal grant announcement behaves. That's how markets react to a signal that an entire industry's risk profile has just meaningfully shifted. There's a useful comparison worth drawing here, one that helps explain why the market's reaction was so outsized. Imagine a relatively unknown restaurant suddenly getting a visit and a glowing endorsement from a world-famous food critic. Even nearby restaurants that had nothing to do with that particular review often see a bump in foot traffic afterward, simply because the entire neighborhood just got tagged as a place worth paying closer attention to. That's roughly what happened here, at a much larger financial scale. The government didn't just endorse 9 specific companies. It effectively tagged an entire technological category as worth taking seriously, and every company operating anywhere near that category benefited from the spillover. This is the part almost nobody outside financial circles is talking about clearly enough. When a government becomes an equity owner in an entire sector rather than simply a funder of individual research projects, it changes the fundamental risk calculation every single investor in that space has to make. Suddenly, these companies aren't just racing against each other for market share and technical breakthroughs. They're racing with an unusually powerful, unusually patient, and unusually motivated partner sitting directly on their cap tables, one with virtually unlimited resources and an explicit national interest in seeing at least some of these bets pay off. To really understand why this matters, it helps to zoom out and look at the broader pattern this quantum investment actually fits into, because it isn't happening in isolation. Over the past year, the current administration has been steadily building an unusually direct investment portfolio across several strategically sensitive industries at once: semiconductors, steel, nuclear energy, and rare earth minerals, among others. The government notably engineered what's been described as a golden share arrangement in U.S. steel, giving Washington special governance rights over decisions at one of America's oldest industrial companies. Quantum computing simply became the newest addition to that growing portfolio, folded into a broader strategy that treats certain technologies not as ordinary commercial products, but as genuine instruments of national economic and security policy. That framing matters enormously because it reveals what's really driving this shift. This isn't primarily about the government trying to make a clever financial investment and turn a tidy profit, although officials have explicitly said they hope these stakes eventually do pay off financially. It's about treating certain technologies as too strategically important to leave entirely to the normal, sometimes slow, sometimes fickle rhythms of private capital markets. Quantum computing, alongside semiconductors and rare earth minerals, has been quietly reclassified in Washington's eyes from an interesting emerging technology into something closer to a strategic national asset, the same category historically reserved for things like energy infrastructure or defense manufacturing capacity. And the reason quantum computing specifically earned that classification comes down to what the technology could eventually be capable of once it matures. A sufficiently powerful quantum computer wouldn't just be a faster version of the laptop sitting on your desk. It could theoretically break many of the encryption systems currently protecting global banking transactions, government communications, and classified national security information. Whoever achieves that capability first doesn't just gain a commercial advantage. They potentially gain the ability to unlock secrets, both economic and military, that the rest of the world still believes are safely protected. That's precisely the kind of asymmetric advantage no government can afford to risk watching a geopolitical rival achieve first. there's a particularly uncomfortable dimension to that risk worth spelling out clearly. Encrypted data doesn't necessarily need to be broken the moment it's created to eventually become vulnerable. Adversaries can simply collect and store encrypted communications today, patiently waiting years or even decades for quantum computing to eventually mature enough to crack it open retroactively. That possibility, sometimes referred to as a harvest now, decrypt later strategy, is part of why governments around the world have started treating quantum computing not as a distant future concern, but as an urgent present-day security priority, regardless of how many years away a fully mature, code-breaking quantum computer might actually still be. That single strategic reality is really the quiet engine driving this entire story. China has been pouring enormous, well-documented sums of state funding into its own quantum computing research for years, treating the technology as a genuine national priority rather than merely an interesting commercial opportunity. Washington's decision to directly co-invest in 9 American quantum companies at once looks a lot less like an experimental financial maneuver, and a lot more like a deliberate, urgent countermove in a much larger, mostly invisible technological race between 2 competing global powers. So let's come back to Wall Street, because this is where the story gets genuinely interesting from an investment perspective, not just a policy one. Once traders and analysts absorbed what this announcement actually meant, the conversation shifted almost immediately from what just happened to what happens next, which companies might be the next recipients of a similar government stake. Prediction markets and trading desks started actively pricing in odds almost immediately. Traders placed roughly 32% odds on IonQ eventually receiving a government stake sometime in 2026, despite the company being conspicuously absent from this initial round. Defense technology company Anduril, working closely with the administration on projects like the proposed Golden Dome missile defense system, was given roughly 31% odds of its own. Even Micron Technology, a memory chip manufacturer that's already surged dramatically in 2026 due to unrelated artificial intelligence demand, was given roughly 28% odds of becoming the next beneficiary of a similar deal. That's not normal market behavior for a routine government grant announcement. That's markets treating an entire category of strategically important American companies as candidates for a new, ongoing pattern of federal investment, actively trying to predict who's next, the same way traders might handicap odds on a corporate acquisition target. Wall Street isn't just reacting to what already happened here. It's actively repositioning itself in anticipation of what it now expects to keep happening. This kind of speculative positioning has real consequences beyond just bragging rights for traders who correctly guess the next recipient. When investors start pricing in the probability of a future government stake before it's even announced, that expectation itself starts pulling capital toward those companies early, effectively giving them a valuation boost based purely on anticipation, rather than any actual government commitment yet. In a strange, self-reinforcing way, simply being widely discussed as a likely candidate for a future government. Partnership has started to function almost like a soft form of validation in its own right, independent of whether that partnership ever actually materializes. That repositioning shows up clearly if you look at how quantum-focused investment funds have adjusted their holdings in the wake of this announcement. Specialized quantum computing exchange-traded funds, the kind institutional and retail investors use to get broad exposure to this sector without picking individual stocks, already had meaningful positions in several of the companies that ended up receiving government stakes, including Rigetti, D-Wave, IBM, and Inflection. Fund managers running these portfolios essentially found themselves already positioned for a policy shift most of them likely didn't see coming with this level of specificity, and investors poured into these instruments in the days following the announcement, treating them as one of the cleanest ways to get broad exposure to an entire sector the government had just implicitly endorsed. There's also a more sober, skeptical thread running through Wall Street's reaction, one worth acknowledging honestly rather than glossing over. Some of these quantum computing stocks were already trading at extraordinarily rich valuations well before this announcement, priced for a level of future commercial success that hasn't actually arrived yet. IonQ, for example, has traded at valuations exceeding 100 times its annual sales, an eye-watering multiple that leaves essentially no room for error or delay. Even with a strong buy consensus among many analysts, some of those same analysts openly acknowledge that current price targets assume close to flawless execution over the coming years, a bar that's genuinely difficult for any early-stage technology company to consistently clear. That tension between genuine excitement about a validating government partnership and genuine concern about already stretched valuations is exactly the kind of push and pull you'd expect to see in a market trying to price. In a fundamentally new kind of risk it's never really had to model before. Nobody has a clean historical playbook for exactly how much a direct government equity stake should be worth to a young technology company's valuation. because this specific combination of circumstances, a strategic emerging technology, an explicit national security rationale, and a direct ownership stake, rather than a simple grant, hasn't really happened at this particular scale before in the modern era. That uncertainty cuts in both directions, and it's worth being honest about that, rather than only emphasizing the upside. A government stake could function as a genuine stabilizing force, a source of patient, long-horizon capital willing to stick around through the inevitable technical setbacks and slower-than-hoped progress that early-stage deep technology companies almost always experience. Or it could just as easily turn into a source of unpredictable political risk, tying a company's fortunes partly to the shifting priorities of whichever administration happens to be in power, rather than purely to its own technical and commercial execution. Investors are still, quite visibly, working out which of those two scenarios is more likely to dominate over the coming years. It's worth pausing here to appreciate just how unusual this moment actually is from a broader historical perspective, because the framing matters enormously for understanding where this could go next. Industrial policy, the general idea of governments actively steering and supporting specific industries they consider strategically important, has a long and complicated history, with plenty of both notable successes and expensive, well-documented failures scattered across different countries and different eras. What makes this particular moment distinct is the deliberate choice to take direct equity ownership, rather than simply handing out grants, tax incentives, or low-interest loans, the more traditional tools governments have typically reached for in the past. Owning equity fundamentally changes the government's incentives in a way that's worth thinking through carefully. A grant recipient's success or failure doesn't directly affect the government's own balance sheet in any measurable way. An equity stake does. If these 9 quantum companies eventually succeed and their valuations climb significantly, the U.S. government's stake climbs right alongside them, creating a direct, a calculable, and politically visible financial return for taxpayers. If they fail instead, that failure shows up as a real, quantifiable loss on the government's own books, not just a research grant that quietly didn't pan out the way everyone hoped. That shift also changes how these companies get talked about publicly, in ways that go beyond pure finance. A struggling grant recipient can quietly wind down a failed research program without much public scrutiny. A struggling company in which the federal government holds a visible equity stake becomes a far more politically charged story, one that opposition lawmakers, journalists, and rival companies all have an incentive to scrutinize closely. That added visibility cuts both ways too. Success stories become powerful political talking points, evidence that a specific industrial policy approach actually worked, while failures become correspondingly harder to quietly bury. That dynamic creates a genuinely unusual alignment of interests between Washington and Wall Street that didn't really exist in quite this form before. Normally, government policy and private market performance can pull in somewhat different directions. Regulators sometimes act as a check on unrestrained corporate risk-taking, and taxpayer-funded programs don't typically hinge on a company's stock price. Here, for the first time in a very long while, outside of the emergency 2008 bailout era, the government's own financial interest is now directly, explicitly tied to whether an entire private sector of publicly traded companies actually thrives. This also raises a genuinely important question worth sitting with, one that goes well beyond quantum computing specifically. If this approach proves successful, if these strategic equity stakes end up generating real financial returns for the government while also accelerating genuine technological progress in a sector considered vital to national security, it's not hard to imagine this becoming a template rather than a one-off exception. The administration has already applied a broadly similar approach to steel, to nuclear energy, to rare earth minerals, and now to quantum computing. There's a real possibility this quietly becomes a defining feature of how Washington approaches strategically important emerging technologies going forward, semiconductors today, quantum computing this year, and whatever the next critical technology turns out to be a few years from now. And that possibility is exactly why Wall Street is paying such close attention right now, watching not just what already happened, but trying to anticipate the shape of what comes next. If direct government equity stakes really are becoming a recurring feature of how strategically important American industries get funded and supported going forward, then understanding which sectors and which specific companies might be next isn't just an academic question anymore. It's potentially one of the more consequential investment questions of the entire decade, because a direct government stake, whatever else it might mean, functions as an unusually powerful signal about which companies and which industries Washington has decided are simply too important to risk losing to foreign competitors. That framing also helps explain why some investors have started treating this less like a single quantum computing story and more like the opening chapter of a much broader shift in how the American government relates to private markets overall. if quantum computing, steel, nuclear energy, and rare earth minerals have all already received this kind of direct government ownership treatment within the same roughly 12-month window, the underlying question worth asking isn't really whether quantum computing specifically deserved this treatment. It's whether an entirely new category of American industrial policy has just quietly been born, one built around direct equity stakes rather than the grants, tax credits, and loan guarantees that used to define this kind of government support. Before we go any further, if stories like this, the ones where quiet policy shifts end up reshaping how entire industries get valued and invested in, are the kind of thing you want to keep seeing, go ahead and hit like and subscribe, because there's a lot more of this quietly unfolding right now than most headlines are giving credit for. There's also a deeper, more uncomfortable question sitting underneath all of this, one worth genuinely grappling with rather than glossing over. Does direct government ownership in a handful of hand-picked companies actually accelerate genuine innovation across an entire sector? Or does it risk distorting the market by artificially propping up certain chosen winners while leaving other promising companies, ones that didn't happen to make this particular list of 9, at a meaningful competitive disadvantage? IonQ's conspicuous absence from this initial round, despite being one of the more prominent names in the industry, is exactly the kind of decision that raises that question directly. And it's a question reasonable people across the political and economic spectrum genuinely disagree about. Supporters of this approach argue that strategically important, capital-intensive technologies like quantum computing sometimes require exactly this kind of decisive, coordinated government backing to compete effectively against rival nations that are already pouring massive, centrally coordinated state resources into the exact. Alone, the argument goes, promising but expensive. Long-horizon technologies can sometimes struggle to attract enough patient capital fast enough to keep pace with geopolitical rivals who don't face the same fundraising constraints. Critics counter that government officials, however well-intentioned, are rarely better positioned than private markets to correctly identify which specific companies and which specific technical approaches will ultimately prove most successful, and that picking winners, this explicitly risks locking in today's most visible, most politically connected companies, rather than tomorrow's most genuinely innovative ones. Both of those arguments have real merit, and reasonable people watching this story unfold will likely land in different places depending on their broader views about the proper role of government in shaping private markets. But regardless of where you personally land on that debate, the practical reality on the ground right now is straightforward and hard to dispute. The US government is now a direct financial stakeholder in 9 major quantum computing companies. Wall Street has already meaningfully repriced the entire sector in response, and traders are actively positioning themselves for the possibility that more deals like this one are still coming. So where does this actually leave quantum computing and the broader relationship between Washington and the technology industry heading into the rest of 2026 and beyond? The deals themselves are still described as subject to completion, meaning some of the final terms and structures could still shift somewhat before everything is formally finalized. But the underlying signal has already been sent, loudly and unmistakably, regardless of how the fine print eventually settles. Quantum computing is no longer simply an interesting emerging technology quietly being watched from the sidelines. It's now officially, explicitly, a piece of American industrial and national security strategy, with real government money and real government ownership sitting directly behind it. That shift alone, regardless of how any single one of these 9 specific companies eventually performs, already represents a genuinely significant moment in how the United States approaches the technologies it considers essential to its future economic and strategic position in the world. Governments don't typically reach for direct equity kind of commitment easily once it's been made. Once ownership enters the picture, the incentives, the political stakes, and the long-term relationship between Washington and an entire industry all shift in ways that are considerably harder to unwind than a simple grant program would have been. Maybe in a few years, this moment gets remembered as the clear turning point when quantum computing decisively graduated from experimental laboratory science into a fully recognized pillar of American economic and national security policy. Or maybe some of these specific bets simply don't pan out, and this becomes a cautionary case study instead, one future policymakers point back to when debating whether direct government equity stakes in private technology companies were ever really a wise use of taxpayer resources in the first place. Either way, right now, today, the United States government owns a genuine piece of the race to build a working quantum computer, and Wall Street has already recalibrated itself around exactly what that ownership might eventually be worth. And that, more than any single announcement or any single stock price jump, might be the real story here. Quantum computing didn't just become a technology worth watching this year. It quietly became a piece of economic leverage the United States is now willing to directly own, defend, and bet real taxpayer money on in a race that most people, watching the headlines, still don't fully realize has already begun,